Hello, good morning. It's Thursday the 26th. I'm FX Blue and this is the market brief. So Boris was on. He was back on the front foot in the Commons yesterday, battling through Prime Minister's questions. Certainly a lot more than last week, where perhaps he was just playing the part of apologetic and remorseful for being caught in the act of lying to the House. Yesterday was different though. Not only was he prepared to defend himself and his record in office, he also went on the attack, criticising the opposition at virtually every opportunity. Strategically, perhaps this was to give a little reminder to his party of the Boris Johnson who won that landslide election for the Tories. Indeed, he may need all the support he can muster right now if he is to survive the Downing Street investigations. Many believe that Sue Gray's report will ultimately sink the Prime Minister. We're still waiting for that report to be released, and Keir Starmer reminded Boris to keep his promise and release the report exactly in the form that is delivered to him. There was a hope the report would be ready yesterday, and that hope has just rolled over to today now. I'm not sure if there was any commitment over when the report was to be released, and I guess there could be a chance that he held it back yesterday so Boris could get through one last PMQ before his grip on power gets a hammer blow. Too cynical of me to fear that may be choreographed to that extent. Come on, it's politics, they're all rats. Meanwhile in the market, sterling suffered from a strengthening dollar as the Fed outlook remained pretty hawkish. We dropped to 134.45 against the dollar, but we did hold up better against the euro, and we open around 119.65 there. So yes, over in the US, the Fed meeting concluded yesterday. There was no action taken to tighten monetary policy, but Powell continued with the same hawkish tone that he'd struck in the previous two meetings. Tapering the additional economic support will soon be concluded, and this will allow the Fed to probably raise rates at their next meeting, which is scheduled for mid-March. This actually accelerated their original time frame by about a month and was well received by the market. In his press conference, Powell reiterated his determination to fight inflation for as long as it takes, and he remains fully aware of the Fed's twin targets around growth and employment. We saw early signs that inflation might be crossing over from the supply side of the economy. Oil sector workers were offered a 1% pay increase for the coming year. Now, the US is not used to seeing militancy from workers, but the current situation is likely to change that with inflation riding high, at least in the short term anyway. That offer was described as ridiculous by the Steelworkers Union, so there may well be some tough negotiations ahead. Plenty of data on the calendar today. Q4 GDP should be the most significant, and that will be followed by the weekly jobless claims and the durable goods data. GDP is expected to be a little over 5% for Q4, unlikely to be affected by Omicron. That's more likely to figure in the Q1 data. And the dollar index surged after the Fed meeting. We touched about 96.55 and recorded the highest close of the year so far, and reflected the dollar drive, and that opened down. We opened around 112.20 this morning, I think. So yeah, that's it from me. Join me again tomorrow. It's nearly Friday. Have a good one.
If you do not have a clue, then just tweet through and ask FX Blue.